and welcome to ET Future of Money Summit. MSMEs are at the heart of the Indian economy, the engine for jobs that contributes over 30% to India's GDP. Helping MSMEs grow is one way for us to boost jobs and power up the economy. But they have their own challenges, and that could be, lack of access to reasonable credit, lack of documentation, knowledge gaps in accessing technology. So, how do you then empower MSMEs in Bharat to drive financial inclusion? Now, many fintechs have taken on the challenge, and I have with me one of them that is solving for this problem. Founded in 2017, Niyogin Fintech describes itself as a young public listed company building a banking as a service platform to help medium and small businesses succeed, and it attempts to serve India's underbanked. I have with me MD and CEO Tashwinder Singh, who has almost 3 decades of experience in strategy and operational roles. He was part of the senior management at Citibank and global investment firm KKR and Co. Tashwinder Singh, welcome to ET Future of Money Summit.
Thank you, Maloney. Thank you for having me here.
So I'll just, begin with MSMEs, which, are described as the lifeblood of jobs and an engine of economic growth, contributing to about 30% odd to India's GDP and 50% odd to total exports. Various schemes have powered MSMEs. Financial inclusion when it comes to MSMEs remains a concern. Tell us about the ways in which you are solving for it.
So this is an old problem, that requires resolution. And there are various people that have tried to work in the world of financial inclusion, right? India has over 800 million people that live in rural India, pretty significant population that lives in rural India. And I think the government has done some very interesting stuff. When they started with the Jan Dhan Yojana, they opened 430 million bank accounts, right? And that was a great initiative, getting the whole India stack ready, creating the whole UPI mechanism for making payments are all methods that have been or stuff the government has done to bring the underserved into the banking sector, right? To the formal banking sector. I think the opening of the accounts was one leg of the story. The second leg of the story is how do you consistently get those folks to start using that account as their primary bank account or their primary method for operating, which means they require the ability to get served from that bank account. I think that's the crux of the problem that we are solving. We are providing the ecosystem of being able to serve those customers who are not necessarily in the formal banking sector, even though they may have a bank account. That's really the crux. Now, how do you go about doing that, right? Our philosophy is that you build the infrastructure for being able to do that. Now, these are use cases we are developing on what the rails government of India has set, right? The India stack that's been created. We are trying to create use cases by helping people or companies that have significant number of storefronts to use those storefronts to effectively deliver banking services to the ecosystem of people around those storefronts. Right. And that's one way we figured that if you really want to bring financial inclusion in the true sense into the market, and there are multiple ways to think about financial inclusion. One is as basic as getting people to use the account. The other could be providing credit to them, right? So there are multiple things, and we can talk about all of them. But fundamentally, we are still at the early stage of trying to make sure people get to use their account and get comfortable by keeping their savings into banking account. And one of the things that they need to be able to keep their savings in the bank account is to have free access to be able to withdraw that money when they need the money, right? And that comfort is important. And for that, you need to have the ecosystem of physical and digital methods by which they can access their bank accounts. What we're doing is we are creating the infrastructure to be able to power the small kirana retail stores, etc., which are spread over the country. There are about 63 million of those, getting them to behave like bank branches, getting them to become the points of contact for a rural individual to be able to go and access his or her bank account, to be able to withdraw money, to be able to apply for a loan, to be able to buy insurance, to be able to do all the banking transactions that what you and I could potentially do digitally or go to a branch in a city like Mumbai and do. So that's really the power of what we're trying to deliver here.
So I was just wondering, what's been the offtake of it? What's been the impact of all that, powering customers through Kirana stores?
So the impact is quite substantial, right? Think about you sitting in a small village without having the need you want to go withdraw money from your bank account, right? You can actually go to a Kirana store today without a mobile, without a card, without a plastic. You can walk in with your fingerprint, with your thumb, and you can go withdraw money from your bank account. That's the power that AEPS does, which is Aadhaar enabled payment systems. We provide the infrastructure of connecting that Kirana store to MPCI or to the bank or the switch through which that transaction can get consummated. Right now, the power to the individual is, let's talk about the people in the ecosystem, right? The individual is getting the ability to go access his or her bank account by going to his neighborhood Kirana store. Huge impact for them because they don't need to go stand in line outside a bank branch, right, waiting for their turn to come. Their transaction gets done in a few minutes. It saves their entire day, and a lot of people work on daily wages. Think about it, that you save them the time that they would have wasted in trying to get to a bank branch. You've killed that time completely from their day, right? Come in, withdraw some money, are able to then use the money to buy some goods, right? And guess what? He makes money as he's rolling out the cash because he gets paid a commission to effectively work like a bank. He's a banking correspondent agent where he's giving money to the person who wants to withdraw money from his or her bank account. The authentication of this transaction happens on our platform, right? So I just want to bring that clarity. The bank loves this because what we've done effectively is we've variabilized the cost structure for a bank. A bank does not need to go create the ecosystem of a branch or even an ATM network in some of the lesser populated or lesser accessible locations in the country, right? And therefore, for the bank, they only pay if a transaction gets done. So you've knocked off the fixed cost for the bank and you've converted that into a variabilized cost. So the three members that are actually participating in this ecosystem, which is the individual, the Kirana store, and the bank who's basically holding the account, all three are benefiting from this proposition.
Tash, can you tell us a little bit about, the different products that you have? So you have urban tech, wealth tech, and also the rural tech product.
So, philosophically, our company is focused on MSMEs. Philosophically, we are a B2B business, right? And we are trying to solve the problems of the MSMEs. Now, there are MSMEs in all parts of the country. There are MSMEs in the urban part of India. There are MSMEs in the rural part of India. And therefore, we have different propositions because we think the requirements and the solutions required for the two markets are different. For the urban market, I think there is a lot of access that's available because a small business that's operating in a city like Mumbai or Delhi or Bangalore or what have you, there is enough and more access available to them. What is the solution that is required for them, right? The solutions are driven more by providing credit, giving them access to credit because India fundamentally is a capital-starved economy, right? So for the smaller MSMEs, their ability to be able to access credit is important. So for the urban India, we have a platform where we are able to help them get access to all financial products that they need for their own consumption. So here the MSME is either taking a loan, which could be a personal loan, a housing loan, or what have you, right? Or the MSME could be buying insurance, right? And they could do all of that on our platform, right? So it's a digital solution, giving them access using a extended network of chartered accountants. We are able to provide these solutions for the urban ecosystem, right? And that's really our urban tech platform. Our rural tech platform, as I mentioned earlier, is focused more on financial inclusion, looking at more rural India and semi-urban areas of India, where we are trying to provide solutions which are also income augmentation ideas for the retail stores. So small retail stores, small front ends, where you have footfalls, people walking in, we are able to power them with financial products or capability to deliver financial products and in the bargain, make extra money. Go back, in the old days when the STD booths came into India first, right? Every small Kirana store had a small STD booth where anybody could go in and start making phone calls, right? And the Kirana store was not a main business. It was a side business. They were running their own store and they were able to do that as an additional business. Think of banking channel being a mechanism exactly the same way, where the Kirana store is doing his or her own business, selling goods, but he's also got a small counter where you can actually go and transact banking transactions on that counter. Now that requires technology for enablement, right? And that technology is what we're providing. That's our rural tech business, right? And then on the wealth tech, we acquired a company on the wealth tech side. There again, we do two things. There is wealth advisory, because we figured that there is significant opportunity for providing superlative advice, especially when you start talking about both the rural and the urban tech areas or urban markets. in rural markets, right, on wealth, because wealth, I think, is underpenetrated as far as rural India is concerned, right? So everyone focuses on the urban side. I think we've got our ecosystem on trying to figure that out. The other thing that we do, being a technology company, is that we understand analytics. So we actually provide solutions to wealth advisors, which are other big banks who are providing wealth advisory. We give them analytic solutions for them to analyze client portfolios to advise their customers better. So it's a slightly different kind of business that we are doing, which is away from the main core of rural tech or urban tech, but it is one of our small subsidiaries that we acquired, and that's moving around quite nicely.
Okay. I have a question on this. You've made these two acquisitions, right, in the past 2 years. The iServe, which deepened market access to underbanked in India, and the second was also Moneyfront,
Right.
which has been integral to the wealth tech product. So can you tell us a bit about your strategy of driving growth via acquisitions? How have you avoided the pitfalls of growing through acquisitions? And the pitfalls of, say, misreading the business impact or not anticipating what comes next.
Yeah. I think the one thing I will tell you is that the one thing we do know is that we don't have all the answers. And therefore, we like talking to young entrepreneurs, right, who've thought of good and new ways of doing stuff. And that's part of our whole M&A strategy, right? That talk to smarter people, smarter than ourselves, right? Try and see what they're trying to build, and then see if there is a way for us to partner with them or to acquire them, to keep expanding our business, right? Of course, they have to be sensible bolt-on ideas and bolt-on strategies. The way I think of M&A for us, right, it has to either get me a better market access, right? So it gives me a deeper market access, or it has to improve my product capability. Moneyfront enhanced my product capability, right? Because we didn't have a wealth proposition, so it enhanced our product capability to the ecosystem of the MSMEs who we were serving, right? Where some of them could have surplus liquidity, and then we could provide them solutions digitally to be able to help invest that money, right? iServe gave us both product capability and market access. They gave us market access into rural India, right? And they gave us product access of completely new products, right? The technology, the ability to be able to call ourselves genuinely as a banking as a service platform came in primarily driven by our iServe acquisition. So if I look at the future, I think we will, because life is too short, and we don't know all the answers, we think we will continue to acquire companies, right? And we will acquire them early on in their life cycle, not late stage companies, because we think we can chart the path for these companies if we get in early on, along with the drivers of those companies, right? Which are the entrepreneurs who started building those companies. We have the capital, we have the capability of providing the capital to be able to fund these businesses, right? And then make sure that, we are able to then expand the product capability or the market access that we have to keep expanding the Niyogin franchise.
All right. But, we are entering a really tough market, right? Like with high inflation, tumbling markets world over, and this could lead to a slowdown in business momentum. So, in this backdrop, what's your strategy going to look like? And do you plan on acquiring any new companies or launching any new products?
Yeah, so I think it's hugely an opportunistic time for us, because when you hear about the funding drying out for fintechs, for example, which is also one narrative that you hear about in the markets, right? I think a lot of homegrown small businesses that depend on capital, I think are going to struggle, right? If they don't get the capital on time, right? Depending on how bad the winter is. I think we could potentially be an interesting partner for some of these guys to come in, to the extent we think that they are value additive to us. We're not a private equity fund. We're not a venture fund. We're not just out there to fund businesses because they need capital. We want to look at businesses that are strategically relevant to be associated with us in the ecosystem that we've developed ourselves, right? So, for example, if you look at insurance, right? Someone who's doing insurance distribution in an interesting way. Today, we do some level of insurance distribution ourselves. But if I was to look at an entity in that space, it could be very interesting. Or if I look at someone, we use a lot of banks give us their APIs. We are able to provide a lot of APIs. If someone else is doing that work more interestingly, we would be very happy to partner with them. There is new products that need to be brought into the market. There are new capabilities, the ability to use better reconciliation tools, ability to use better notification tools, etc. We created our own switch with MPCI. We have our own switch called iSwitch, right? That's enhancing the capability of improving the customer experience and sending transactions faster to MPCI and getting deals done better. So there are multitude of things that we could potentially look at which could either help us improve our tech stack, right? Improve our connectivity. It could give us market access. It could improve our product offerings that we give in the market. I think we will do a bunch of these. But I think we will continue to remain focused on the MSME. I don't think we have the plans to suddenly become a B2C company. We are a B2B company, and we will continue to remain true to our path in that count, right? And that's what we will end up doing.
Oh, so I want to broad base this conversation now. And speaking of MSMEs, according to the World Bank, there is about a $380 billion worth of MSME credit gap in India. And according to the International Financial Corporation, 95% of addressable demand for credit comes from the MSMEs. And one of the reasons MSMEs are not able to access formal finances is due to the lack of documentation or credit history. Now, in this backdrop, how do you see fintechs help solve for this issue and enable MSMEs, so that they can actually move into formal finance and
so
thereby then serve the underserved population?
Yeah, no, that's a very interesting question. I didn't mention this. We are also an NBFC, right? At Niyogin, we are also a non-bank finance company, and we also provide credit, right? So when we are doing our payment business, when we are doing our rural, financial inclusion business, the MSMEs that we deal with, we are also able to provide credit to them because we have so much information because of the transactions that are being transacted on our platform. We are able to use that transaction data to be able to then provide credit to people who otherwise would find it very difficult to get credit because they have no history. They have no credit history. They have no transaction history. It becomes difficult for them to get credit. So we are also trying to create the ecosystem of going right at the bottom end of the pyramid and trying to create the transaction history by getting them to become partners on the financial inclusion side, then use that data to be able to deliver credit to them. But to answer your question, that's about us. I think the government of India is doing some very, very interesting stuff. We are living in some very, very interesting times, very exciting times, right? 2014 was when they started working on India Stack, and then UPI got launched, and that just completely changed the way payments happen in our country, right? And India, as you know, is pretty much ahead of most other countries if you look at the number of digital payments that actually happen on India, right? Last year, for example, India had almost 48 billion transactions done, which was almost 2.5 times than any other country. And China was, I think, number 2 with probably about 20 billion transactions or 19 billion transactions, right? The same thing is now going to happen on the credit side. Government of India is working on trying to create, and you would have read about the OCEN network, the OCEN network, which is the Open Credit and Enhancement Platform, where they're trying to make sure that let's build the rails to be able to provide credit to the entities in question, right? To me, I think it's a fabulous innovation, not an easy one, by the way, but I think the government has got their eyes set on getting this done. I think it'll create the window for a lot of people to start getting credit who are not able to get credit today, because there will be an open platform where you could go discount your bills, you could get the best cost of credit available and credit. And on the other side, you will have people who can provide the credit, right? Which are NBFCs, banks, etc., who could be, feeding off that network as well, which I think could be interesting. We think there could be multiple use cases we could build on top of that network as well. And I think that's one of the things that we've been thinking about. These solutions, if we work on these solutions as a standalone company, ourselves and some of the other companies, I think the impact will be much, much lower. But when the government creates a platform on which all of us can play on, then the impact is significantly higher. And we've seen that in the payment space, right? Government created the UPI, base, or the IMPS base, or the AEPS base, right? These are all platforms the government of India created for payments, right? AEPS is the Aadhaar-enabled payment systems. I think as they create the OCEN network, I think it'll open up the window for credit being available to a lot of people. So that's the next big challenge for the government. If you really think about it, India continues to be cash-starved, capital-starved, as I mentioned. The MSMEs, you mentioned about a certain ratios, about 30%, 50%. I think the number you should think about is the employment that the MSMEs provide in this country. And employment is important, and capital is important for them to be able to sustain those employment figures, right? So I think the OCEN network is I'm very bullish on that personally. I think we have to get together and try and solve this problem. The opportunity is huge. The other way to think about life is that the lending opportunity in India is tremendous, right? How do you access this lending network? Now, technology and the question you asked was on fintech. How is fintech solving this problem, right? I think fintech is really solving this problem by thinking of newer ways of trying to reach out to customers. The problem with lending is two things, right? Well, there are three parts. There is the client origination, there is the underwriting, and there is the collection, right? I think the underwriting process, there is enough data that's now coming in. You have GST data that's coming in, you have transaction level data, you have account aggregators that RBI has now allowed. So there's going to be a lot of information available for the underwriting piece. The cost of client acquisition and the cost of collection, I think, are two places where there is some work that needs to be done to be able to make sure that the cost of client acquisition can be minimized. And using a digital method to acquire clients could be one way to reduce the client cost. And again, using digital methods to collect, right, as customers get comfortable using their own bank accounts, and there's more money sitting in banks than sitting in mattresses, you will see that will also become easier. So I'm pretty bullish on that as well. And I think fintech is going to play a very, very important part in making sure that these two costs can get reduced to make the lending viable for the final borrower.
Yeah, and really, the access to credit can, spur the economy in ways that we can only imagine. As you said, job creation remains a very important challenge for us, and this is one way for us to do so. This is my last question to you. How do you boost financial access? This is a problem, again, that many are attempting to solve. Are there any technologies that you are particularly excited about that you think could spur financial inclusion?
So a lot of things are happening, right? So for financial inclusion, if you take a very random thought, my view is that if you really get the central bank backed digital currency into India, which I think is one of the things that is at play. Again, I thought, I know there are more intelligent people than all of us who are sitting and working on that. But that to me could be fantastic, right? If you could provide money to people in a digital way, completely, where you could also decide where that money can be spent. Right now, there are other issues along with that which one needs to think through. But I think that could be as one of the use cases for central bank backed digital currency could be financial inclusion in a very big way. Right. So that's a new thought that would come in. Open is a new idea that would come in for financial inclusion. And the other thing that we're doing, and I think other people are also doing, is India has such a significant number of retail stores. I mentioned the number 63 million, and the number may be dated. The number may have already moved up or down. Who knows, right? Why do we need to create incremental infrastructure, physical infrastructure? We have to keep using the existing infrastructure to allow people to access all kinds of things from that infrastructure. Creating new infrastructure, creating new brick and mortar outlets are not required. We have to be able to find efficient ways of using existing outlets, whatever they may be, whether it's a kirana store, whether it's a bank, whether it's a small store selling a barber shop, for example, or even a guy selling mobile phones. They have to be some level of consolidation of products that they can sell. We have to allow products of all kinds to be sold across these channels. Right. And that's how you will reduce, because the problem with financial inclusion fundamentally, is you have to reduce the cost out of the equation. Once you remove the cost out of the equation, it starts becoming viable. And unless it becomes viable, it's a very difficult proposition, right? Because this is not, financial inclusion should happen and work on the merits of its business, not because it's a socially right thing to do. Right? It is socially right thing to do, but it has to also stand on its own feet. It cannot depend on grants, etc., for it to get done. And that's one of the things that we want to do. We want to keep proving that companies can make money by being, by providing financial inclusion, and there is money to be made at that end by knocking off cost, not by loading more, by making your products expensive, but by reducing cost and therefore making the whole proposition cheaper.
As you put it, Tashwinder Singh, CEO and MD of Niyogin Fintech, thank you so very much for your time and for your thoughts today. We wish you all the very best.
Thank you, Meloni. Thank you.